It's Tuesday. That means it's Trading Tip Tuesday. Get a lot of questions about, Josh, how do you trade this? Specifically, how are you margin trading this? So I'll say this at the outset. This is not trading advice. It's educational information. And I'm not responsible for your degenerate losses. Okay, so I don't know who knows what from where. So let's start from the beginning. Let's break this down. You can do this with any chart, any asset, any ticker, any time frame, blah, blah, blah. It's universal. First thing is you need a litmus test. You need a high time frame litmus test. Are we bullish or are we bearish? If we are bullish, write it down. If you're new, write it down. I am bullish. Okay, put that in a sticky note on your screen. Next sticky note. I will only look for longs. I will only look for longs. If I'm bullish, I'm looking for longs. If I'm bearish, I'm looking for shorts, especially if you're a new trader. Do not counter trend trade, because you will lose more money than you will make, I guarantee you, because you will think every pop needs to be immediately sold off because you missed the trade. You will think every drop needs to be immediately bought up because you missed a short there. It just doesn't work out, especially with crypto. Crypto trends very hard, very swiftly, no prisoners, doesn't care who you are, doesn't care you lost your entire trading account. It doesn't care, okay? Look for longs if we're bullish, look for shorts if we're bearish. So here are some examples of a litmus test for long shorts. 20-week SMA. Historically, again, if you want back testing, that's another thing. People love to ask about back testing. I don't know why, it drives me insane. But when people ask me about back testing, my first answer is always, go ahead and put the indicator on the chart and tell me what you see. Odds are I'm not using some wackadoodle indicator if it doesn't have positive backtesting results, okay? So don't ask me about backtesting because you can do that yourself. Okay, that's the first thing. If you're using something you can't backtest reliably, like Elliott waves, then just throw it away. It's garbage, okay? It's garbage. It's garbage. Stop using Elliott waves. Stop using garbage you can't backtest. Here's the 20-week SMA. Let's do a visual backtest, okay? We're above the 20-week. We're bullish. We're looking for longs. We're bearish. We're below, looking for shorts. Above, looking for longs. It gets messy. Nothing is perfect. And then what do we now? We're above. We're looking for longs, right? So that's one litmus test, looking for longs. Let's talk about the daily 200. Same story, above looking for longs, below looking for shorts. We're currently above, we're looking for longs. I don't care which litmus test you use the cloud. I like the cloud the best. Tells you exit, entry, stop loss. We are above the cloud. This was the entry down here in October. The litmus test says you look for longs. Okay, that's step one. When you're margin trading, I don't care if you're on the 30-second time frame or if you're on the 12-year time frame. Pick a decently high time frame. Use a litmus test. Use multiple litmus tests. Are you long? Are you short? Based on trend. So that's step one. Okay, I cannot stress that enough because so many people will consistently short this entire trend up, and I thank them. I thank them so much because they make me richer and make anyone else trading this trend richer, and they lose all their money. Okay, that's just the fact of it. That's just how it goes, folks. We can talk about hedging and all other strategies in a different video, but right now, if you're talking about margin trend trading and you're talking about being profitable in a decent way, you are longing the trend if it's bullish, okay? I hopefully said that enough. So that's the first thing. Litmus test, trend, high time frames. Now let's look for targets, right? One easy way to do this, use the Fibonacci extensions. Pick a big high, big local high, big local low. Look for the 1618 and the 2, just the measured move, 2x from the point you've selected. And more often than not, price will at the very least recognize that level. And what do you know? We're here right now. Just the day I happen to be doing this video, we're here. We're in between the 1618 and the 2. So this helps you gauge, where should my targets be? Where should my mega macro targets be? Not my targets on the 4-hour or the hourly. I'm talking about, where is this trend gonna relax a little bit? Gonna probably consolidate, probably recognize some resistance at this level. We're currently in that zone. 17.8 to 21K, whatever it is. Probably gonna chill out here. So we're currently there. So this says, if you're looking for longs, your upside is rather limited unless we get another insane run, which is possible. I'm not saying it's not possible, but it's just saying use your risk accordingly. Do not, here's not trading advice. Here's what I wouldn't do. I wouldn't go 20x long here. looking at this chart specifically because it says, hey, you know what? We may have made the move for this consolidation period, and we may need additional consolidation periods before we make higher moves. That isn't to say we just will go insanely parabolic. It's just about risk. What is your risk here? What is your downside risk? I'll get to that in a second. Your upside targets, your reward, is ideally rather limited here for a high time frame long position. Looking at something else, I like to look at the pitchfork. It uses 3 points on the chart here. Okay, what is the upside resistance, the median line? Price wants to live in this brown zone in the median line and the yellow area. We're currently also approaching that area. We're also approaching yearly pivot beyond that at around 24. So we're talking about 21 to 24, 23.5 as far as upside targets, okay? So you have your mindset based on trend, litmus tests, then let's look for targets. Some of it based on subjective stuff like Fibonacci extensions, some of it based on math like yearly pivots, okay? You can see how we reacted at previous yearly pivots, how we reacted at this yearly pivot, bounced down, we're back above it. Knowing what I think I know about yearly pivots, I think we actually go higher to the next rung up at 23, 24. But I'm also in the back of my mind thinking, okay, the extension here is around 21K, so be careful. And then, oh, by the way, we are very far away from the 200-day moving average. We are very far away from this R1 yearly pivot. We're actually very far away from the Kijun on the daily as well. So all of this is where the risk conversation comes in, because then we start talking about mean reversion, and we start talking about how low could this go if this stops going higher. So you have to have this entire conversation before you say to yourself, I'm going to go 5x long here, I'm going to go 20x long here, ideally, because if you aren't, you're probably going to lose more money than you're making. So we're bullish based on litmus tests. We have our targets. We're approaching our targets, but there's a decent amount of upside. There's definitely a decent downside if we hit 13K to 15. Not saying we are. Those charts won't disappear. They'll never disappear so long as the means are down there. That's where the price will recognize support if the current low fails at around 15.8. So having all that in mind, saying upside is probably limited, downside is bigger than upside, risk reward is kind of poor here. We're saying, okay, we're still looking for longs. I'm a trader, I got to trade. What do? We can go to lower time frames that makes sense based on the speed of the trend. So pick any trending indicator you want. Pick 15 to 200, the 10 and the 50, the alligator, a pitchfork, some other SMA, whatever, it doesn't matter. Pick whatever you want. Pick a time frame where it looks like there's a best fit. For me, looking at this 4-hour cloud, how it has reacted previously. Previous results aren't predictive of the future, but you're trying to set a gauge for how is the price trading right now? How has it been trading over the past few months? Has it been explosive on low time frames? Has it been quiet? Has it been all over the place? Is it non-trending? Should I just be not trading right now? It's clearly trending. So long trades should be profitable, are viable, make sense, etc., etc. So to me, this looks really good on how this fits the 4-hour cloud, how this fits these MAs, how it's above. Basically, the cloud is the ultimate litmus test for trend. If it's above, it's bullish. If it's below, it's bearish. And then these blue and red lines act like moving average type lines, where they tell you where to buy, tell you where to exit, stuff like that. So it tells you to go long down here. We go above the cloud, finally. You could argue about going long over here, getting stopped out, whatever, going long again. Clearly, it's telling you to go long, down here somewhere. Doesn't matter how you played that, whatever, it's hindsight, who cares? So we're long. We jump out of the trade here, and you can see how much of the trade is captured here. So to me, this says, okay, 4-hour game on. Let's look at the 4-hour for some setups here. We bounced so significantly, so quickly on the 4-hour, we're actually overbought on the 4-hour. So for me, margin bids are on the 4-hour Kijun, margin long bids, because there's an expectation of trend continuation here. Everything is bullish. We dip below the cloud, returned above. So I'm looking for 5 to 10x margin longs at 18 with a stop loss. I mean, realistically, at the previous local low, which is rather low, and or the daily cloud, which is rather high. So somewhere in between there, depending on how you want to play this, depending on the leverage you use. At 5x, it's much more forgiving. So I'd probably use 5x leverage here at 18, look for longs. I would not want to go long here because then we have to have that mean reversion conversation where we are decently far away from the Kijun, and we probably will go sideways or return to the Kijun before bouncing up or continuing the trend. Similar to how we did here. We exploded, mean reverted, exploded, went sideways, mean reverted, exploded, never actually mean reverted. And in late stage trends, you don't always mean revert. Right now, to me, this looks early on the 4 hour. Something else to watch for, divergences. I covered that in another video, but there's a very clear bearish divergence on these higher highs here. Again, hindsight, but important to recognize when you're trading this, because this also informs you of risk and reward. If you're getting a bearish divergence, a growing bearish divergence over 2 weeks, I don't long that. Okay, yes, my trend said the litmus test say trend is long. I'm looking for longs, but this is a caution. Be careful because stuff like this happens, and you'll see you will see bear divs, over and over again that help inform you what to do here on the long side. So ideally, I'm margin long at 18, looking for targets above 20, 21, 22, 23, 24, based on pitchfork, based on yearly pivots, that sort of thing. One other thing I'll say about figuring out like line of best fit for trend, clearly on the hourly, if we go from the 4 hour where it's nice and tidy, we're above the cloud, to the hourly where we are in and out of the cloud over and over again, we are in and out of the TK lines over and over again. Just, it looks like a mess, right? This is not something you want to trade. This does, if you might turn on an altcoin and it might look like this, it's like, okay, let's move up a time frame because the signals here are way too noisy. You're not going to be longing and shorting this every time. You want to look for something clean like this. You want to look for something clean like we did on the daily, where there's literally 3 trades to be made, 3 long trades over the past 7 months. Those are, for me personally, those are the trades I love to take. They're high reward, low risk, profitable trades, highly profitable trades. So lastly, I'll just mention, if we do get mean reversion, if you're in your 18K long here and you get stopped out, where are my other bids at? Where are my big Mac Daddy bids at? They're at 15 and they're at 13. Down here, if we get down here, that's where I step in with cash, fiat, and buy more. Because to me, we've adequately mean reverted, and this is a macro bullish trend, and macro bullish trends typically last a decent amount of time if they survive a 20-week SMA bounce, as they did in 2016 and 2017. So ideally, you're loading the boat. You are buying the dip like you've never bought the dip at 13 to 15. You have bids there now. You're waiting to send money to wherever you need to send it. You're getting it ready in case we get down there. So I know margin trading is a complex topic, a personal topic. Depends on what exchange you're trading, depends on the liquidity of the coin. But you can do this exercise with anything. Do it with ETH, same story. Do it with YFI, it doesn't matter. It's all about identifying the trend, using a litmus test, identifying potential targets based on yearly pivots, monthly pivots, Fibonacci extensions, and then fitting the trend metrics to the time frame that makes sense for the trend, like the 4 hour in this case. This is just textbook beautiful. Like if I could frame this, I would, because it looks so perfect. This is exactly what you want to see if you're trading this specific indicator. So you have to know your indicators. You have to know what you're looking for. You have to know entry, exit, stop loss. You have to know when to long, when we're not overbought enough that a long makes sense, right? To me, just based on risk reward, I want to get long at 18 here. This is just one example, but specifically, this is what I'm looking at. And then lastly, you just want to identify huge mean reversion plays if we are in a crazy trend. Look at this trend since March. Look at this trend. And this is the mean reversion all the way up here at 13. Like that's nothing. That is a blip since where we've been since March. So this would be a gift to get this low on a mean reversion play. So if we do drop, that's like a 30% drop or plus 40% drop, whatever it is. People get scared. They don't buy when they should be when the mean reversion happens. So you got to be ready. You got to be vigilant. You got to trade smart. Make money, don't lose money.